Welcome back to our program. We want to start off with this developing story, which has got to do with Construction Bank. We are told that Construction Bank is set to fold up by the close of next month. This is information that we are picking up from our sources close to the bank. Now, we understand this decision is because the bank cannot meet the minimum capital requirements set by the Bank of Ghana. I want to just tell you what we know so far. When did Construction Bank start operations? It opened its doors to the public on May 30, 2017 after securing license from the Bank of Ghana. It is the 44th bank to be licensed by the Bank of Ghana, and it's got the former boss of ADB, Steve Poggi, as the MD. What was the bank's mission? Well, it is wholly Ghanaian owned, and it was supposed to provide banking services in project finance, commercial and consumer banking with specialization in construction. And we're hearing that it would be folding up by the end of August 2018. This closure is subject to the central bank's approval. And as I mentioned, what we're hearing is that the bank is folding up because it is unable to meet the 400 million Ghana cedis set by the Bank of Ghana as minimum capital requirement. This decision to end the operation was purely taken by the shareholders, in that they were not forced to take the decision by any external institution. And as of now, July 31, 2018, we understand only 4 banks have met the minimum capital requirement. We understand that 15 have committed to meet the amount. We're yet to see how that pans out. But I want to have a conversation around this. I believe joining us via Skype is Charles Mensah. He's a financial analyst. We'll try and work out that connection for you tonight as you try and make sense of all of that. Thanks very much for your time tonight. Construction Bank closing, big deal?
It was to be expected because once you cannot meet your minimum capital requirement, then you must make effort either to merge or to ask shareholders, I'm referring to existing shareholders, to inject fresh cash, or you invite third-party shareholders to join the company. Now, if these two things cannot be organized, then the obvious thing to do is to go for the voluntary liquidation, which is, if I'm to glean from what you do, it means that they are doing voluntary liquidation.
They started operating in May 2017. By then, we knew what was the minimum capital requirement for banks. So then I'm wondering, why were they given the license to operate in the first place?
Oh, usually, when you start, yes, you would have promises. Shareholders would have a plan with the Bank of Ghana, and the capital will come in tranches. So when the first capital drop in, they expect maybe the second capital to drop in. Now, it depends on who the shareholders are. If the shareholders are not forthcoming with the capital, it means that the bank will be cash trapped. So the shareholders among themselves and the directors can then take a decision that, listen, we can't raise the money as promised, and therefore let's fold up. So that could happen. The alternative is that the same shareholders and the directors can plan that let's go out there, raise money from third parties. Now, the merger with third party, third banks will not work really because they only have a year experience. Much as the individuals have experience in the banking sector, the bank itself had 1 year experience, and therefore I'm not sure what they will bring onto the table for a bank to merge with them. So the obvious thing is what they've done, i.e. voluntary liquidation, which will require Bank of Ghana approval. Bank of Ghana coming in will ensure that depositors' money are protected, and every depositor will have his full money and interest intact.
Well, it's quite disappointing because we don't have many of such specialized banks in the country. I mean, Construction Bank is the only bank with the focus on the construction sector. Very disappointing there. But my last question to you would be, what other alternatives do they have if they can't merge? Maybe turn the bank into a savings and loans company. Is that viable?
That depends on the appetite of the shareholders. If the shareholder, because savings and loans bank means that you have to have some branches out there. Now, construction bank is kind of specialized. So you know that you are focused on the construction industry. You are lending money to construction companies, to providers of houses, and then to contractors who are doing roads. So with that, you have to have access to cheap long-term loans to provide. So if you don't have access to cheap long-term loans, then you have to resort to equity from shareholders. So if you lack these two things, then obviously it's to fold up.
And it's quite unfortunate they made little impact. Thanks very much for your time with us tonight. That was Charles Mensah, he's a financial analyst on news that Construction Bank will be folding up in the next month. Well, let's move on to other stories. Government says it will take up 50% of all loan facilities advanced by companies under the One District, One Factory program. It says it has so far released to 15 companies these amounts at various stages of construction. Yao Safma for a senior minister.
The much-anticipated One District, One Factory policy aims at transforming the country's economy to an export-led one. According to the senior minister, interest on loans by various banks has been identified as a challenge to securing funds to finance these projects. He was speaking on the theme Unlocking Economic Growth through Manufacturing Cost, Quality and Competitiveness.
And we have unemployment on hand. And therefore, whatever we do, we should make sure that we are encouraging employment of our own people. And if that would mean a small cost addition, we should all be ready to take that on board, because we want to generate employment as a byproduct of industrialization. And this is critical for government. If our problem is unemployment, then we must resolve it also through tariffs. And I think we should be ready to do that. But we cannot overdo it to protect inefficiency. That's what I mean. We must always do it bearing in mind certain ratios. Don't forget that we also have harmonized ECOWAS tariffs.
The senior minister also outlined some other plans by government to ensure the flagship program becomes successful.
I'm happy to say that the Ministry of Agriculture is about to start an agricultural census. And it's very important because the last one was done in the 70s. You need an agricultural census to be sure about your data on a regional basis and even on district basis, so that you can take advantage of what you are doing. Now, when we talk about one district, one factory, the final product of a factory may become the raw material of the other. So when you talk about market, it's not that all the markets must be consumption market. No. All over the world, people produce for others to use as input for production. And the one district, one factory, we already identified a few where people are going to produce and serve as a raw material for other districts to also finalize. So I think we thought about all those things. We identified the problems of the industrial sector, and we think that unemployment is the #1 problem we have as a country. And therefore, we're thinking about industrialization. But as I said, industrialization operates within certain environment. The reason why many of our industries collapse is that we did not pay enough attention to the microenvironment.
The senior minister, Yao Safamafo, also noted the move by government to absolve 50% of interest on loans will boost investor confidence. In another development, Yao Safamafo said Cabinet has approved about 236 million cedis to support potential but stressed companies under its stimulus package program. So far, 15 projects have been approved for implementation under the One District, One Factory project. Meanwhile, government expects 50 of the over 600 projects which have already been appraised to be in production by end of this year.
You're watching Business Live. That was a report from the Graphic Stanbic Business Breakfast Meeting focused on manufacturing. We'll have a conversation around that after this break.
You're welcome back to Business Live, and policy initiatives such as the One Ghana Beyond Aid and a flagship of so we want to discuss issues on the manufacturing sector, and we have a lot of factories that are been running for some time now, but we are introducing the One District, One Factory as well. What is the current state of the manufacturing sector, and are banks lending towards that aspect? That's what we want to discuss. And Philip Namfuri joins me.
Hello,
Philip,
Sandra.
give us a sense of the manufacturing sector in Ghana.
Okay, so I'll just give you a brief history. Looking back since Kwame Nkrumah's time, even before that, as far back as Governor Gaggisberg's time, we have had certain challenges with our industrial policy. And I have here a book titled The Economy of Ghana, 60 Years After Independence, edited by Ernest Ayite and Ravi Kambu. And it captures so succinctly the problems we faced in our industrial sector over the course of the time. But with the emphasis on the manufacturing sector in regards to lending, if you look at the data that I was able to gather from the Bank of Ghana's banking sector report, it says 3 sectors accounted for 56.9% of total outstanding credit balances in the banking industry. And these are commerce and finance, services sector, and the construction sector. Now, what this means is that most of the funds where banks are channeling their monies are going into areas where they can make a quick return.
So quick money, they are not lending to people in the manufacturing sector.
Yeah, so the argument is that they're not lending long-term areas. And if you look at the structure of the economy, most of the deposits in nature, most of the deposits are short-term in nature. So they will need access to long-term funds in order to commit these funds to such long-term products. Because the lending to that industry or that sector, you need time. Putting up a factory is not a day's agenda or a year's agenda. This takes time. So you need to do a lot of structuring, a lot of financial engineering in order to secure such funds to lend to such sectors.
We've been talking about Ghana Beyond It, and obviously we spend so much important things into Ghana. And so if you don't pay critical attention and then lend to these manufacturing companies, are we going to achieve this dream of Ghana Beyond Aid? Okay,
no. So the Ghana Beyond Aid agenda, it also takes some time. And I'm sure they'll come out with a document, like the president said some time ago, where they'll have a framework within which we would operate this Ghana Beyond It. But if you look at this manufacturing sector on its own, if we are going to grow to a point where we consume our own stuff and we're going to cut back our imports, which will save our CD and other things like that, then looking at our banks, that's why some people raise the argument, and by some people I mean analysts, raise the argument that, look, the banking sector in itself, some will say is lazy. But if you look at the structure of the economy also, like I said, they'll need to bring in long-term funding, and long-term funding primarily will come from beyond the shores of Ghana. Whose
duty is to ensure that we have this long-term funding for the manufacturing sector?
It is all of us. That's why, and if you read the media budget review, they were talking about, or even the budget itself, the 2018 budget, leveraging on pensions industry and the life insurance industry. These provide long-term capital. Tier 2 pension funds, what you and I contribute, in total, it's about 10 billion cedis. If they leverage on these funds, structure it properly so that we can channel some of these monies in some of these areas for lending, it will do us some benefits.
But Philip, one will ask, we have so many factories that were since Nkrumah's time, as you read, that are still out there. Some of them are not functioning. Maintenance has been an issue, and we are just going into this 1D, 1F thing. Is this something that you think that we should have focused on all? I know people have spoken about this, but focus on, revamping all those dead factories that are already on before we tackle this whole issue of 1D, 1F.
Okay, Sandra, I think it's we can look at it from different areas.
Okay.
Some argue that
from the financial,
from the financial sector,
does it make financial sense?
Finance or lending is looking for a return, so we need to bridge the gap between developmental needs and institutions like banks making returns.
Okay.
Because if you don't strike that fine balance, then there's a problem.
Okay, so moving forward, how do we ensure that we have a vibrant manufacturing sector to be able to cut down importation of goods into this country?
So lending is one area. There are other things that the government has put in place. You know, we had the power challenges. Power stabilized. They're trying to give incentives, stimulus packages, and stuff like that. So going forward, all these things need to come together to create some cohesion to drive growth in the manufacturing sector.
Philip Namfuri is our in-house analyst, and we've been talking about strengthening the manufacturing sector. Do you purchase made in Ghana goods?
You know, I was going to make the point that one of the ways we can help, at least, is to patronize some of these goods when they are produced.
Yeah.
Then it can show up the manufacturing sector.
What do you have next?
Well, up next, unfortunately, we have to close. That ends our program tonight.
That was too quick, right?
That was too quick, yes.
Yeah.
Time flies when you're having fun.
Yeah, sure.
Anyway, thanks for watching Business Live. More news on our website, myjoyonline.com/business. My name is Daryl.
My name is Sandra Snap, and I've been having the discussion with Philip Namfuri. We'll see you tomorrow.